Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. Good morning, AJ. How you feeling? Moving in to the whole new setup there, I see.
We've got the new office. I've been up late at night putting things away. You can see haven't yet unpacked any of the resources, the books that we usually have in the background. So we've got a neat little studio here in the new place, but it sounds good and it looks good. So I'm stoked.
It does sound good, and we're gonna keep an eye on the evolution. Today is December 15th. This is
Yeah.
episode 111, and
Options expiration day.
options expiration day. But the topic that I want to start the show off with is this 4,600 level, right? We've been talking about it for quite some time, and I feel like this past week we just burst through it, and so the market's very optimistic.
Well, and I want to point something out. So I've been analyzing this because we've been talking about 4,600 for a long time simply because there has been so much selling pressure at 4,600. We were looking at NASDAQ level 4 data, which allows us to see how many orders, limit orders, are placed at different levels, right? And so what that tells us, I mean, a lot of people don't quite get what support and resistance is. They're kind of self-fulfilling prophecies, right? If you think about just the basics of supply and demand, when you run up price to a certain level and there's a whole bunch of automatic sell orders that start to fill at that level, when they're selling, it starts to make price go back down. So support and resistance levels are nothing more than levels at which a whole bunch of usually automatic selling orders and automatic buying orders kick in, right? And then all of that selling and buying gets other people to jump on board to do the same. If they see a lot of profit taking, they'll start taking profit taking as well. And it creates kind of this like tribe effect, this mass hysteria of buying or selling, depending on whatever. So we've been looking at 4,600 and we've seen, a whole bunch of sell orders ready to pop. And so, the people who are watching this price action sip, they were like, there's been an increase in buying. Actually, what we saw, and so this is a slight nuance, is that the sell orders were removed. So people, let's translate that into just everyday terms. People all of a sudden became optimistic enough to say, hey, I don't want to take profits at 4,600. I'll look to gain a little bit more. So it wasn't necessarily more buying that took place. It was simply that people who had their sell orders in place decided to cancel those sell orders and raise the bar. Today, we're actually seeing some profit taking again. So it's just like people said, well, it looks like there's so much positive optimism and positive momentum that maybe I'll remove my sell orders at 4,600 and put them up here at 4,700, 4,725, something like that. The next overhead resistance that we see, SIP, is up here at 4,800, and this would actually bring the S&P 500 into all-time highs, getting above 4,800.
And I did see this week the news headline that the Dow hit all-time highs. So I
Yep.
know that different stocks are weighting those differently. Um, and so when we look at this recent rally since like November, basically the end of October, mid-October or something.
October 27th, yeah.
This week's jump through 4,600 is primarily spurred by the rhetoric from the Fed. Is that correct?
Well, don't forget this week was our week of heavy economic news. So, starting on Tuesday, we got our consumer price index. I'm pulling it up right now. Consumer price index shows that things are cooling off. So, people are looking at this kind of cooling off, or I mean, in normal times, this would be considered bad news, right? Things are slowing down. But because we know that the Fed has wanted to do that and the Fed has been pumping the brakes. In fact, last year, the Fed didn't just pump the brakes, they slammed on the brakes. Because we know that that's been their tactic, we kind of want to know when they're going to get their foot off of the brake pedal. And so by seeing this kind of slowing in the consumer price index, that's pretty good, right? People are down to 0.1% gain month over month. That's only about 1.2% for the year. If you extrapolate this, multiply this by 12 months. So that's actually, right in line with the Fed wanting to get it down below 2%. Factoring out food and energy, that still tells you, 3.6%. That's still lower than that where we were at 5 and 6%. So CPI gave people hints on Tuesday that the Fed that started to meet Tuesday and continued to meet on Wednesday, culminating in their announcement on Wednesday. People were like, God, the Fed's got to, take their foot off of their brake at this point with this information. And then if we take a look even further at the other data that was released this week, let me go ahead and get my cursor rejiggered here. Go back to today's calendar. There we go. We had our producers price index. So that measures inflation in the supply chain versus on the retail level. And you can see, producers price index pretty much said there's no inflation at all. It's flat. There's no growth whatsoever. Year over year is less than 1%. Factoring out food and energy, it's also flat. So they're basically saying that, hey, the economy is starting to filter through zero growth, which is a little bit too much of putting on the brakes, right? And so the next piece of information we got was on Thursday with retail sales. Retail sales slowing down as well when you take out the very volatile vehicles and gas or vehicles, it's down at 0.2%. So even the retail sector is slowing down. And finally, today we got our industrial production numbers. This is how much manufacturing is going on, and it's down as well. So, the cool thing is that the economy is cooling the way the Fed did. And they even mentioned that on Wednesday, and it gave rise to this sentiment that the Fed is indeed going to start cutting rates in 2024, meaning they're not only going to stop pumping the brakes, but they may even, at least when it comes to interest rates, they may even start tapping the gas. In January, the end of January, where the next Fed meeting is, there's this tiny sentiment that they may they may drop rates, but for the most part, they expect nothing to happen at the end of January. But when you start to look at March, we're expecting a rate cut in March and then another one in May and even another one in June. So investors actually expect rates to be down at about 4.5% by June timeframe. And so that got people excited. And as we said, what that related to is people saying, oh my gosh, maybe instead of selling at 4,600, we could get a little bit of extra profit. But I do have to say, well, I'm going to stop there. Does that all make sense, Sip?
Without a doubt, it makes sense. And when I was looking at some of the news headlines and the feedback from the Fed statement, it was very positive. Like sometimes when they come out with their cuts
They're
and
vague, right?
they're very vague, but this one was positive across the board, and the market screamed up. And I think the way that you described it makes the most sense, where those stop orders are getting removed.
Yeah.
and people are holding on to those positions.
But I still and I hate to be the person who rings in, just the overall the Fed has this is that quantitative tightening that they're doing, right? This means that they're also at the same time their rhetoric is saying that hey, things are cooling and their actions when it comes to interest rate hikes would be to tap the gas. We have to remember that on the flip side, they have this other tool that they're using, and they're about maybe a fifth of the way through what their goals are for quantitative tightening, which means that they're going to keep tapping the gas on the interest rate side, or at least that's what people expect them to do. But at the same time, they're still shredding money, right? They've still got like $4 trillion that they want to pull out of the economy and just shred. And so that's kind of like an ongoing tax that they're going to keep pulling out of the markets. And so that's going to have a negative effect. And also, and so I'm talking medium to long term. Also, the fact that people were celebrating that things are slowing down. I mean, they're celebrating that things are slowing down because they want the Fed to take its foot off the brakes. But at the same time, if things are slowing down, they're slowing down. And so, what that means is that this rally could be just kind of a temporary rally above 4,600. Again, I hate to be kind of the guy who puts the wet blanket on things, but fundamentally, this renewed optimism in equities could quickly turn into like, oh my gosh, this is bad news, and it's ongoing bad news. From a technical perspective, you might notice that my chart looks a little bit different than it did last week. Last week, we actually thought that we were going to get that reversal. And if I show you my little indicator that shows the 3 and 5 day crossing, which is what I use to confirm tops and bottoms, you can see that we actually did get that crossing, but it was just a little touch. It was a 1 day touch. And my little indicator didn't give me the red arrow because, well, we have this. Let me see if I can pull it up here. Here's one right here. I have this thing called a 1-bar reversal filter. This is kind of unique to our indicator. And it basically filters out these little one touches because those one touches don't actually count as a confirming. If I didn't have that guy in place, you'd see a whole bunch of basically what we call false positive signals. If I turn him off, for instance, you see how we had a 1 day down and then a 1 day up. That's not a true signal. So we have this cool little filter built into our free indicator that anybody can download. And so we thought that we were going to get a confirmation of a top being found. And our filter said, no, that's not real. And sure enough, we kept going up. And we haven't yet gotten that confirmation that a top has been found. Our highest close now was yesterday, and it looks like we may get a slightly higher close today. But I have to just tell everybody from a technical perspective, this is still considered an immature uptrend, meaning this is a rally, right? But one move doesn't determine the medium to long-term direction of the markets. We would need, in order to really buy into this uptrend, we would need to see a pullback and then a resumption, right? So a pullback and then a resumption, and then you could say, okay, it can pull back. There could be some profit taking, but that doesn't destroy the uptrend. We haven't gotten that yet. So from a market analyst perspective, this is still considered an immature trend that can reverse at any minute. And I caution folks, be aware of that. Don't get sucked into, false optimism.
Yeah, and it that reminds me of one of the notes that you left this morning before the show. I'm going to go ahead and throw it into the chat. and I'll pull it up onto the screen because I think it touches on what we do here, what you do at Trading Trainer, the strategy. And the quote is, "This is a horrible market for long-term buy and hold investors." I agree. We're hitting these new highs, but we're slowing down. But in the contrary, it's a fantastic market for options traders who can profit in other ways outside of directional moves. And so that's the what you've been preaching, that's the strategy that you educate. And so looking at this trend to the upside, are we going to be looking to pick up some options and profit if the market pulls back a little bit, or if we see a little bit of chop, right? Because we could force, there could be some up days, some down days. We might find some support at that 4,600 and not move for the next 2 months.
So even option traders right now have to be nimble. And what I mean by that is because this move is immature, we still don't know what the medium to long term holds for us. And so we have to be very careful trading strategies that we think we're going to be in for the long term. And that's kind of, against my fiber, because I love those trades that I can set up today and they're still going 5 or 6 months from now. But the truth is the market hasn't told us yet what it's going to be doing. So here's what we need to do. Number one, we need to watch. We need to watch where are we going to top? That's going to be quite important. So we need to be looking for this next top. Like I said, we didn't get it. And so we're just waiting until we see when it tops. And that where it tops is going to be very significant. So I want everybody to take note at whatever the highest close is when we top. Then the next important data point to tell us what the market's going to do next is where it falls from that top. And, if it comes about halfway from where the low and the high was, that's perfect. That means we know that the market's going to be uptrending for the medium to long term, and we can start making those decisions on what we're going to do medium to long. If it overshoots that halfway point, then we're going to start trading strategies in, the medium to long term that are built on sideways chop. And if it not only overshoots that medium, but even overshoots these lows or about 25% below that low, well, then we're going to, start trading down trading strategies, right? Or we're going to say that the market is still in transition and we're going to wait even further for the following reversal after that. But those two key data points will help us determine probably the next 6 months of trading. In the meantime, we have to take a very nimble stance. That means doing short-term trades that are really only designed to last like a month or so. And so, yeah, directional trades. If I see a top coming up, I'm totally going to short the market. I'm totally going to be looking for, maybe stock replacement strategies on put trades. I'm going to be looking for little things that I can do maybe on a week to month long basis just to pull out quick profits while I wait for the market to tell me what it's going to do in the medium to long term.
The other thing that I would do is keep an eye on your nifty indicator there and wait for the red one to pop up, because if we go back and we kind of trace the indicator, it's got a pretty good success rate of calling it. So we want to wait for that
Totally.
for that red dot to pop up there.
Should I give everybody the settings for that one more time?
Why not?
All right. So if you've got my downloaded indicator and you're waiting to see, how that works, pull up the indicator if you've got it. And what you want to have it set at is moving average, close, 3 in exponential, 5 in exponential, and these two actually don't matter. And then turn on the 1-bar reversal filter. We actually had a discussion last night, Sip, at our weekly workshop. This is the workshop for my paid subscribers that We get together every Thursday and we plan out trades together, and then everybody takes the plans and goes forths and conquers with them. We had a discussion about why we change these settings depending on what we're looking at and whether we're trading it or whether we're looking at the broad market. It was a long discussion, so I don't want to recreate it here. But what I do want to let people know is this is perfect for watching the broad market and having the broad market tell us what's coming up next. So this is the broad market settings. So moving average, close 3, exponential 5, exponential. Don't worry about these two. They don't matter when you've got it set like this, but do turn on the 1-bar reversal filter and you'll be set for knowing when reversals are coming in the broad market, especially on the S&P. I've even had some success using it on the VIX to understand when we find bottoms in volatility. But on the S&P, use those settings and wait for the arrow. And all you do is when you see the arrow, look back. If it's a green arrow, you look back at the lowest close. If it's a red arrow, you look back at the highest close. And that's going to be your reversal day. So you can see when we got our green arrow, we went back 3 bars, and that's where we found the reversal day. When we got our red arrow, we went back 1, 2, 3, 4, 5 bars, and we found our highest close, and that was our reversal day. So that's how you determine a reversal day in the broad market.
And we just posted the link to gain access to that indicator in the chat. So head on over there and check that out. Also in the chat, we went ahead and threw AJ's daily workshop. So if you want to follow along and learn a little bit more about these strategies, if you're new to the show, new to the broadcast, that's a great resource for you to check out. That's a pretty in-depth breakdown of the market. What we're going to do is take a little bit of a break. We're going to talk a little bit congressional stock trading. We'll go over AJ's pick of the week, review a couple names from the past couple of shows. If anybody watching has a ticker that you want AJ to run through, now is a great time to go ahead and throw that in. We're going to take a little bit of a break. We'll be back in a few seconds. Sit tight.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
Every time I see that video, AJ, I'm just reminded that it's sunny and 70 like every day in my neighborhood. And then when we connect and you're out on the East Coast, every morning I'm like, oh, I wonder if AJ's like getting up and he's gotta like put on some layers and he's gotta like warm up.
Yeah, I mean, the sun is out today. You might be able to see a little bit of sunbeam in our new studio here. It's coming in behind my trading monitors. The sun's out, but it is brisk. I think it's down in the low 40s, or maybe it was even in the high 30s this morning here. This is a studio in Washington, D.C., or in the suburbs of Washington, D.C. that we're in today, and so it's a little on the brisk side. I'm not going to lie.
Well, it is that time of the year, right? Today's the 15th, options expiration. Next week is the full week before a Monday Christmas, which it's probably going to be pretty choppy, wouldn't you say?
Yeah. It's the last minute before folks start, vacating. What I always like, and we'll see it, but I'm going to give you guys some foreshadowing. What I always like is the week between the Christmas holiday and the New Year's holiday, because think about it. Do you guys remember that movie with, not movie, the book, The Christmas Carol with Scrooge? The folks that, kids are home from college, kids are home from school. So there's going to be a lot less volume trading the markets, right? People are going to take days off of work and they're going to just spend family time. So what happens in the markets is you have a few traders that are like diehard investors and traders, and they're the only ones in the market during that week. And so some really crazy stuff happens. Remember, the market is like a jury trial. It's going to be the bulls versus the bears. And the jury is whoever shows up for that day. So if you've got everybody showing up, then it's the votes between, those people and those people. But when you think about it, and again, thinking about the markets being just this huge psychology experiment, who is left trading between winter holidays, Christmas and New Year's? Usually folks that have some extreme beliefs, right? They don't have mainstream beliefs, because mainstream beliefs would be, let's spend some family time. So you've got folks with extreme beliefs, extreme takes on, data. And so those are the folks who wind up sticking through the winter holidays. And then they take the market during that week in some really neat spirals. Like, they react to news headlines, they react to the data quite differently than the mainstream does. And so the markets between the Christmas and winter holiday, all the way to about the 2nd and 3rd of January, can oftentimes go quite crazy. And then as soon as folks start coming back into the after January 2nd, January 3rd, the market then resets and starts to go the way of mainstream. But it's always interesting to be reminded that a few voices speaking loudly can really take the markets in one direction or the other. And for us traders, we need to be very careful about, jumping on any bandwagons during that week between those holidays, because we could totally get burned as soon as, the full body of investors comes back.
So have your have your stops in place, right? Make sure those are in place. Another thing that's crazy that I came across this week that we can cover
Oh,
in our
yeah.
topic of the day was, I saw this like CNN or one of these news stations made this video of this kid in Santa. I wouldn't say kid, but in his 20s, who made a site that essentially follows all of the trades of the congressional leaders, and it's called
I love that.
capitaltrades.com. And when I came across this thing, AJ, I was like, wow, this is pretty sophisticated data that you can go into actual leaders and see all their trades, filings, issues, the volume, their percentage returns. We can go look at the last trades of today, right? Today at 6 o'clock, Debbie Dingle went ahead and picked up some Metatronic PLC. But I just thought that this was very interesting because there's a lot of chatter about banning, right? There's some bills that are coming up for debate about if our congressional leaders can be on committees and invest or even short certain names. And so I thought this was very interesting. I'm going to go ahead and throw the link into the chat. I'm curious to know your thoughts in
Yeah.
would a tool like this be useful for something, maybe some of your strategies, some things that you may be looking at every now and then?
I mean, any sort of insider information is very valuable. One of the things we always talk about when we find a candidate for trading options against is we do something called a soft data analysis. And we look actually at, as part of that soft data analysis, at the insiders of the company, like the executives and the board of directors. So the president, the CFO, the CEO, and then we look at all the board members and see what kind of trading they've been doing over the last year. With so much lobbying taking place and so many congressional people involved, this is just another tool in our, and I shouldn't say just, this is another tool that we should be using. It would be cool. I don't know. We'll have to talk about it here at the Trading Trainer. We have a planning session for these Friday calls. We should try to get somebody from this website, just so everybody knows we're not, we're not sponsored by Capital Trades. We don't even really know the folks behind it, but it would be cool to like just give them a call and see if they wanted to be on our show and talk about this. But I think this is, uberly valuable for us, especially if we want to trade options against one of these candidates that possibly has a bill coming up where they could get so much government funding. That would be fantastic.
Yeah, it just yesterday. This looks like Representative Ro Khanna is the one that's leading this congressional ban on trading for members and lobbyists and donations. I mean, it's very interesting because I don't know if you know this guy, Tommy Tuberville, but he used
Oh,
he
yeah.
used to be like the Auburn coach. He is out here throwing around a lot of shares of all sorts of things. I actually saw one of your Cleveland Cliffs was on the list. I know that's one we talk about all the time.
Yeah. Yeah, Tommy, well, he's been making headlines here in Washington, D.C. because he was the one who made it. He blocked the ability for any of the high-end ranking, any of the military guys to get reassigned. He blocked legislation. Congress, I guess, and this is the farthest thing. Thankfully, I don't leave my house much here in Washington, D.C., but there's a lot of folks around here who are involved with the federal government. But the rumor is, I guess every year they have to congressional people have to approve generals to become generals and things like that. He blocked them all for like a year so that our armed forces didn't have any leaders. It was quite interesting because he was like making a stand around some viewpoints that he had. So it's cool to see, I think that this kind of transparency is fantastic for not just investors, but people in general. So yeah, that's cool.
Yeah, and I don't think this isn't paid. So anyone that's interested can head on over there. A lot of accessible information. So go ahead and check it out. Keep an eye on it. Very interesting. We'll reach out to the team, see if anybody's interested in providing a little bit of feedback on that.
It's very cool. It's very cool.
I was like, wow, you can really dig into some insights here. Because they got to know something, right? They're on these committees.
And I got to tell you as well that if you actually look at how much even the president of the United States, how much they pull in income-wise, it isn't that much. I mean, they're public servants, and these people who work in Congress, they don't make so much money working in Congress. It's not a well-paid job. It's like just above the mean salary. Well, the president makes a little bit more. I think he makes just under $500,000 a year, but they don't make very much money. So, I don't see a bill like this. I see maybe it coming up and getting some news headlines, but to get all these folks to agree to it and get it to become law, I don't see that happening because a lot of these people are just like us on this call. With their investors. That's how they make their money. They don't make the majority of their money working as a U.S. congressperson because there's not much money to be had in being a public servant. They actually, on the side, are investors and portfolio, and a majority of those folks are. So I don't see a law like that ever passing, but it sure does make for good headlines.
Well, I'll tell you what, this guy French Hill from Arkansas has really been slanging them.
Look at that, his
Altria, Intel, Visa.
Look at his little face. That is awesome. That is such a useful tool. I hope we can get a hold of whoever that is and have them on our podcast. That would be awesome.
To me, it's like, okay, if there's a few trends here, maybe it's worth putting on the watch list and then visiting.
And they got featured on talking. You saw them on like the news.
Well, I saw them on TikTok, but it came from the news on the TikTok. But that's kind of just the way news travels these days.
That's awesome. That is really cool.
That is capitaltrades.com. Go ahead and check it out. If you learned something, feel free to share it with us, and we can share it with the team and the community. All right, AJ, let's dig into a few names that we've been looking at the past few weeks. Where do you want to begin? What are you feeling?
I want to start at General Motors. God, I can't let this guy go at all. This General Motors symbol. And a lot of people have been asking, let me ditch some of my indicators here because we're going to switch gears here. We're going to switch gears from the indicators that we use to watch the market to indicators we look for actual individual, buy and sell orders on a symbol. So let me go ahead and pull this one up, and I'm going to make it so it's not visible anymore. Same with this one. And now I'm going to take my same indicator and I'm going to reconfigure it. You guys might want to write this down as well. So one of my favorite entry and exit signals, especially on sideways choppy symbols, it's called the Fast MACD, and we featured it on this show before. It's nothing that I came up with. It's the Fast MACD from the guys over at the MACD, the folks who originally came up with it. And they call it the Fast MACD because they put in faster numbers than what's in the typical. So the typical one has a 12 for the fast length, a 26 for the slow length, and a 9 for the MACD length. They came up with a few years later these fast set of numbers that a lot of people use, including myself, which is 6, 19, and 3. So if you program in one of my indicators, have it set for the MACD, and then put in 6 exponential, 19 exponential, 3 exponential. In this case, we do not want our 1-bar reversal filter turned on, so turn that guy off. And then what I've been doing personally is instead of using the closing price, I've been using the volume weighted average price. And I actually, I've been part of a couple of multi-speaker events recently, and I hope some of you guys were able to check that out. I was part of the Mad Hedge event, the Traders Exclusive event, and even the Timing Research Synergy Traders. And so I get to listen to some of the other folks' presentations. And I listened to a whole presentation on the benefits of using volume weighted average price. So I've been using that, and built into our little indicator that we're giving a lot of you for free is the ability to kind of choose what price is used in calculating it. So just so you guys know where my head has been recently, I've been looking at this volume weighted average price. And I really like that because it puts a little bit of, we were talking about how a few voices speaking loudly can move the markets temporarily until level heads come back into the game. VWAP helps you ignore that, right? At least that's one of the benefits. So VWAP, and then also this guy over here, the high-low close divided by 3. This is another one that I've been looking at. This is one that factors in historical volatility. So there's more to it than just the close price, right? We can use high-low close divided by 3 or VWAP. In this case, I've been using volume-weighted average price. So let's turn that guy on. Did I actually turn him on, or I didn't turn him on? Okay. And then now you've got a set of magenta and cyan arrows. They're a little bit more reacting versus the one that we use to look at the broad market. But it helps us see, is this a possibility of a reversal trade or not? So we got a really clear one here on November 14th that told us to do some buying. And I always tell my program participants to use this as an end of day signal. So if you get a signal at the end of day, it means that you want to try to trade it in the upcoming days. And so in the upcoming days, we look for what we call daily follow through. So we got this signal, and we really didn't get the daily follow through until 4 trading days later on November 20th. But if you take a look at it, and if you would have gotten in on November 20th, you're doing really good right now. And you can see that we got kind of an exit signal, but remember, it's an end of day signal, and it never got the follow through. In fact, yesterday evening, we got a signal that said, hey, stop trying to look for follow through. So you'd still be in this trade if you got in on the 20th and you got in at $28. Even the stock itself, SIP, you'd be up over 20%. On an option, you could easily have more than doubled your money so far. So I'm really liking this right now. And for those folks that missed that trade back on November 20th, you're looking for a top. I'm looking for a top in which I'm going to look for, a short. And make sure if you're using my indicators, the first thing you're doing is you're using it as an end of day indicator, not as a intraday indicator. So wait for the end of the day, see if your arrow is visible. If your arrow is visible, then look for follow through the subsequent days. Don't actually try to trade on the end of day indicator. That end of day indicator just tells you that in the upcoming days, if you get follow through, place the trade. And don't place the trade if you don't get follow through. That's when you have to exercise your discipline. That's why they call me one of the most disciplined options trader out there. I only execute on those black and white entry and exit signals.
And a few things went well for GM in terms of timing. Technically, it was setting up well. The UAW strike was kind of resolved, and then the overall market was just shooting up. So a lot of things lined up well for this GM trade. So congrats to anybody that was able to jump on it. I know this has been a name that we've covered for a handful of weeks.
I gotta say as well, did you hear that everybody is Ford as well? They're kind of tampering their EV expansions. I heard that Ford was going to slow down the F-150 product line. It's interesting, this whole EV discussion.
Yeah, they're just getting super expensive, all vehicles, and so I would maybe consider that as one of the reasons.
Yeah.
Another name that we've discussed a handful of times, and there have been some opportunities, is Zoom, ticker symbol ZM. Looks like we might be topping out there.
Yeah, so we got that again, end of day signal. Let's actually look over here on December 13th, which was the day after our end of day signal, to see if we would have actually considered that a topping, getting follow through. So to do that, I'm actually going to pull out a chart and I'm going to show you guys how I evaluate follow through. I think that might be fun for some of you. So here I've got a separate chart and I'm going to go intraday, right? Because when we're looking for follow through, we're actually looking intraday. So I'm going to look at a 15-minute chart. So each one of these bars is now 15 minutes. So again, going back to that daily chart, it was the evening of December 12th that we got our potential, sell signal or short signal. So we're going to look at December 13th and see if we got that follow through. So here's December 13th. There's actually a whole science to it, and I go over that with my program participants, but to give you the summary of it, one of the main things I want to do is I want to make sure if I'm finding a top that I'm trading lower than the previous day close. So that would be here, and also lower than the day's open range. The open range is established in the first 30 minutes of trading, and the open range is defined by the high and the low of the first 30 minutes. So I want to be below both. And sometimes the close is lower, sometimes the open range is lower. Whichever one is lower is the one we want to be trading below. And so I never trade until either most typically it's the afternoon session. And the reason is because the mornings are always very volatile with all the economic news being released and with amateur hour and all that good stuff. So I really don't come in until around 12:45 Eastern time. So something around here, right? So this time frame forward is when I do most of my trading. And if I know that there's going to be an afternoon announcement, like for instance, the Federal Reserve announcing that they're going to change rates or anything, I may wait until the last hour of trading. That's called professional hour, when professionals rejigger their portfolio for the day. But usually it's the afternoon session on. So I come in the afternoon and I ask myself, am I trading below previous day close? And am I trading below the open range? And the answer here would be a big fat yes, I was. And so, yeah, I would place this trade and do some selling. Now, as we see here, when I go back to my daily chart, that would definitely not have been such a bad trade, right? If you got in somewhere here and you got out up here, not bad at all, right? We like to buy low, sell high, and that's going from just under $60 to just over $73. If you're using a leveraged option, my gosh, again, you could easily have doubled your money on that move. So now we're looking for the opposite move. Can we short this stock, or can we use a substitute option? In this case, we would use a put option, usually 3 to 6 months out, usually deeper in the money if we want to use a stock replacement, or if you're really elegant, you know how to use an out of the money trade to take advantage of extrinsic gains. So, so much possibilities. If you've got those option strategies in your back pocket, you have all these tools in your tool chest that you can use to really double, triple, even quadruple the gains that you would make on just a stock move. And so I'm really excited for anybody interested in Zoom.
All right, that's Zoom. And another name that I think is worthy of checking out is the financial ETF, XLF. I know we've reviewed this one a handful of times, and banking is kind of a big sector that moves off of any of these Fed numbers or rhetoric.
So same thing. You're absolutely right. The financials are totally correlated to the broad market. And so, yeah, we got our sell signal, whether you took it or not, that's fine. But, I would be careful about this buy signal that we got. If you acted on this latest buy signal, be ready to have, for instance, a trailing stop in place, because just like I've been raising the alarm bells around the unsustainability of this current rally, be nimble. That's what the game is right now. Be nimble. Be ready to take your profits off the table at a moment's notice on this XLF. We're waiting for this XLF to recalibrate so that we can trade premium against it.
All right, XLF. We'll keep an eye on it. We don't have any other names to run through on my end.
Nope, mine end either.
It seems as if options expiration, the market's not really doing anything. We're pretty much at break even right now, and what is that, like 3 hours into the session on a Fed week on a Friday, heading into a Christmas week. So slow and steady seems to be the pace.
I think people are at some point, and I say this every week, and then every week I'm proven wrong, because it's investor optimism is through the roof. But at some point here, reality will set in. And it's going to be interesting because, Sip, there's this long-standing belief that what happens in January of a year dictates what happens for the whole year. And if you look back in time, it's like I think it's like an 80% correlation. So that's kind of cool. We'll see when we get towards closer to the end of this month. We'll go back and look at what happened in January and see if that's what happened for the year. But I'm also interested in what happens in January of 2024. So we'll all have to keep our eyes peeled on that.
Yeah, and we'll continue to develop our watch list. If anyone's interested in joining AJ's weekly community, send us a message. Head on over to the workshop that we posted in the chat. You should be able to gain access once you sign up there. You'll get some more information. If you've enjoyed the broadcast, we appreciate you tuning in. Hit that like, hit that follow, hit that subscribe button. We've got 2 more shows left through the end of the year. So maybe we'll use those as some annual recaps. Maybe we'll look at some names that have moved throughout the year. Otherwise, if anyone's interested in a specific topic or some names, feel free to throw it in the chat. Send us a DM. We'll see if we can bring it up on the show. AJ, any final words on your end?
No, like Sip said, we just got through moving studios, and so we're going to be continuing to like build out this studio and make it one of the best things that we can give you the best podcast that we can. But other than that, yeah, nothing on my end. I can't wait to see you guys next week in the AJ Brown Show coming up.
All right, guys. AJ, thank you for your time. Thank you, everybody, for tuning in. We'll catch you guys next week.
All right. Talk to you guys. Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.